how the consumer's doing and how the latest Fed interest rate hike could impact consumer spending and the economy. Joining us now is Michelle Meyer, chief economist at Mastercard Economics Institute. Michelle, what was your takeaway from Fed Chair Powell as it relates to the economy?
Well, I think Fed Chair Powell was very clear. He is completely committed to cooling down inflation and achieving price stability, which means you got to cool down the economy. And right now, what we're seeing in the economy, and clearly what Fed officials are seeing as well, is a lot of resilience in the labor market, resilience in the consumer that's out there, yes, facing higher inflation, facing high interest rates, trying to navigate that, but being able to, given the amount of purchasing power that they still have out there.
So given monetary policy and these big interest rate increases hit with a lag, how long can the consumer hang on?
Well, I think a lot of that rests on what happens to the labor market. To me, that is the critical data point out there, is the pace of job growth, the path forward for the unemployment rate, looking at high-frequency indicators like initial jobless claims or job openings or the quit rate. These things that tell us about the amount of churn there is in the labor market. So far, there's been only really moderate cooling. Still see a lot of job creation, still see a lot of income growth. And as long as the consumer is seeing income growth, they're able to be out there spending, especially given the health of their household balance sheet with savings and credit card growth. So I think it's going to be a function of when the Fed feels like they've pushed enough, where they're starting to see those cracks, those proper cracks in the labor market. That will be the real turning point for the Fed to say, okay, monetary policy works with long and variable lags. We've done what we need to do for now. Let's slow it down. Not there yet.
Yeah, Gary Cohn's saying the wages, that's going to be the key going forward for the markets and for the economy. That wage growth filters into everything. So, Michelle, the resilience of the consumer, how are you processing how the consumer is dealing with inflation? Is the resilience simply the fact that they are paying higher prices for everything, or are they actually, is traffic up, is spending up? Can you just get more granular on what you're seeing?
Sure. I'm always happy to get granular, Sarah. So what we're seeing in the spending pulse stat is a consumer that is still spending on aggregate and running at about 11% growth on a year-over-year basis. But you are seeing these shifts, right? So in the categories where you've had the biggest price increases, particularly in categories like durable goods, things related to the housing market, which has clearly been suffering, there has been a pullback, especially once you control for inflation, look at the quantity measures. In other categories like experience-based spending, travel, recreation, restaurants, there's an acceleration of spending, especially in the last few data points. So I think the consumer is certainly making choices. They've changed their behavior to some extent. They've obviously acknowledged higher prices. They're not pleased with some of these high prices. But the fact is that when you look at the numbers on aggregate, nominal spending has remained strong.
Michelle Meyer, thank you very much for the pulse check on the consumer. We appreciate it.